What if I told you China's stock market was never really designed to make ordinary people rich? What if the biggest problem with the shares isn't corruption, isn't bad luck, isn't even market crashes, but the system itself? Because for more than 30 years, China's economy became one of the fastest growing economies in human history. Cities exploded upward. Real estate created millionaires. Factories transformed the world. Almost everything went up, except the stock market. And the deeper I studied it, the more I realized something disturbing. Shares don't actually operate like a normal investment market. They only look like one. A couple years ago, when China's stock market once again fell below 3,000 points, the internet was flooded with one sentence: stay away from the stock market, stay away from drugs. Sounds emotional. But honestly, for many Chinese investors, that sentence came from experience. Because generation after generation, people kept entering the market believing they were investing, only to slowly realize they were playing a completely different game. And strangely enough, the moment I fully understood this market started with Warren Buffett, or more specifically, with one awkward conversation involving Buffett as representative in Beijing back in 2004. And honestly, that moment explained China's stock market better than any economics textbook ever could. Back then, China's stock market was sitting around 1,400 points. Think about how crazy that was. China's economy was booming, real estate was exploding, infrastructure was everywhere, GDP growth was insane. Basically, everything in China was going up except the stock market. And around that same period, Warren Buffett started becoming very optimistic about China. So Buffett sent one of his business partners and public representatives, Robert Miles, to Beijing for an investment seminar. The event was held at the Beijing Friendship Hotel. Only elite fund managers were invited, large institutions, top private funds, maybe around 100 people total. And Robert Miles gets on stage talking about Buffett-style investing, long-term investing, value investing, patience, discipline. He talked about the future of China's stock market like it was the next great opportunity. He even discussed creating a Buffett-style fund focused on China's share market. Now, honestly, most people in that room weren't very impressed. Not because Buffett wasn't respected, but because everyone there had already studied Buffett's ideas for years. Then the Q2I session started. Each person only had about 30 seconds, and suddenly I had an idea. I grabbed the hotel's ballpoint pen and wrote Warren Buffett and Robert Miles on a piece of paper. But I wrote the English letters vertically, from right to left, like traditional Chinese calligraphy. Then I handed him the paper and asked, "Mr. Miles, can you tell me what this says?" He stared at it for a while, and then finally said, "I don't know." The entire room burst out laughing, because every Chinese person there understood it immediately. And then I told him, "See, we use the exact same English letters. But once those letters entered a Chinese system, even you couldn't recognize them anymore." And honestly, that perfectly describes China's stock market. On the surface, China copied America's financial system. American terminology, American exchanges, American-style regulators. But underneath, the incentives were completely different. It looks Western on the outside, but internally, it operates with a completely different mindset. And maybe that's the biggest misunderstanding ordinary investors ever had about China's stock market. People thought they were investing in companies, but in many cases, they were actually participating in a system designed for something else entirely. A system created to solve institutional problems, to rescue state-owned enterprises, to move capital, to maintain stability, not necessarily to create long-term wealth for ordinary shareholders. And once you understand that, a lot of things suddenly start making sense. Why so many companies care more about fundraising than shareholder returns, why promises are often forgotten, why retail investors keep coming back and keep leaving disappointed. The problem isn't simply that the market crashes. Every market crashes. The deeper problem is trust, because real value investing can only exist when rules actually matter, when promises are enforced, when shareholders and companies succeed together. And for a long time, many Chinese investors slowly realized something painful. Shares may look like a modern financial market on the surface, but underneath, it still follows a very different logic, which is why that sentence became so popular online. Stay away from the stock market. Stay away from drugs. Not because people hate investing, but because too many people spent years realizing they never fully understood the game they were playing.